All right. Good morning, good afternoon, and good evening for everybody out there. Hope you are doing well. This is Monday after the 4th of July. Hope you all had a fantastic 4th of July weekend. Our prayers are obviously with the folks in Kerrville, Kerr County, north of us here in Central Texas, as well, all the families and rescuers and people devastated by the floods here in Texas. And yes, it is possible to have that type of flooding. I've been around it before. Actually, back in college in 1998 when I was working in New Braunfels at the grist mill and Green Hall, where I saw basically just about everything below the grist mill devastated. I've seen mobile homes, families flow by the river in just a matter of a few hours. I was actually working today for one of the worst floods down there, and like I said, my prayers are with a lot of folks out there. But we were safe, we were dry, we were out of town, celebrate 4th of July with my family. But hopefully everybody is rock and rolling. You had a safe time. You're ready to rock and roll back into with your note business here as we get past the 4th of July to claim your independence, claim your financial independence. And we're honored to have you guys here. We've got some new folks here on the coaching call today. We opened it up to the public for those that wanted to get around to look into some stuff, who are tired of looking at the same old stuff, the same old tired crap on listing websites, stuff like that. We don't waste our time with stuff. We are getting new stuff on a regular, weekly, sometimes daily basis from our sources at banks, lending institutions, hedge funds. And we've been doing this quite a while. For those of you that followed me, we've been buying notes since 2010. Actually, 2008 was when I bought my first note, but buying it in 2010, been teaching people since then as well. And really honored to have you guys join me here on this Monday right after the 4th of July. I know it's easy to kind of, I'll get back to it after I recover from my vacation. God knows I felt like not working today as well too from some travel, but I wanted to get things rocking and rolling because this tape is kind of it's kind of a urgent one. We have bids due basically by tomorrow. I was able to get a 24 to 40 hour extension for bids because this tape came in middle of last week on Tuesday and Wednesday. We posted it to our WCN crew members for you guys to take a look at it. Start making offers. If you're brand new, saw some of our Facebook posts like, well, how do I get tape? We'll talk about how you get access to the tape here in a few minutes. But anyway, guys, we've got a lot of stuff to go through. Don't know if this episode will take about an hour. Yes, if you're listening to the podcast, welcome. Thank you for listening as we come up on our, getting pretty close to our 1000th episode on the Note Closer Show. Anyway, one of the great things is when we get tapes in, we like to map them so you guys can see the geographic area, see kind of where it's at. This is all over the United States, California to Florida, all the way up to New York, even up to Montana, which we don't usually see a lot of stuff up in Montana, but occasionally we'll get some stuff there. And the color coordinates of the map here, you see red, blue, green, some light blue, very light blue. It's all broken down. Even a yellow is in there too. Some brown. It's basically batch geo that we use for this thing helps map it. And we coordinate it by the breakdown of the classification, the milestone. If it's performing, there's a chunk of performing stuff. There's some BK Chapter 13. There's some pay plans have been active. Some pay plans have been issued. Some performing mods. Some sub-performing stuff. A BK Chapter 7. And even one BK Chapter 11 mixed in with the bunch. So ideally, if you're looking for performing notes, this is a tape to take a look at. All right. Now let's talk about the breakdown. There are 71 performing notes. Okay. 85 of these are BK Chapter 13s, where the borrower is trying to do some sort of payment plan. There are 2 performing mods, one BK Chapter 11, as I mentioned, that's a commercial note, or a property may have been cross-collateralized in a commercial deal. There are 24 sub-performing notes where they haven't made payments in a while. And we're not just talking 60 days, although there is a bunch of stuff that's been sub-performing for like the last 2 to 6 months in this tape. There's 1 pay plan issued, 2 active pay plans, and 1 BK Chapter 7, which is basically liquidation. The BK Chapter 13s obviously would be ones that you would keep for the payment plans as long as they're performing and go from there. Now, some more information about the tape breakdown for you to take a look at here. The state breakdown, it is over 33 states, okay? 22 of them are in the Lone Star State here. Actually, Texas represents the largest majority of assets on this tape here, which we don't often see that a lot, but there's 22 all across the good Lone Star states. 18 in God's waiting room, or the Sunshine State, Florida, as we like to say. There are 17 in the land of Franklin, Pennsylvania. 16 in New Jersey, 12 in the Peach State, Georgia. There's also 12 in New York State, the Empire State, 11 in the Tar Heel State of North Carolina, 10 in Illinois, 8 in sunny California, and 7 in Ohio. And then there's a bunch of other ones, 5, 4, 3, 2, 1, mixed throughout the rest of the tape. But that gives you a bit of an idea to take a look at. All right. And so, yeah, it's pretty diverse all across the country. You know, and the reason we wanted to make sure and let you guys know, those that are watching this live or this live, is that there's, you know, like I like to buy in Texas. Texas is my favorite state, even though it's not my number one state because we don't see a lot of it. Or when I do, I like to pay attention. I've loved Florida in the past, not so big on Florida now. There are a few areas I would take a look at, but with the insurance and the taxes and other things, Florida's kind of dropped down my list. But Georgia's always a popular state for folks. North Carolina, Ohio. There's other states in there. Indiana had a few in there that I like as well. So, but let's dive into some more information. So some more loan breakdown. Now, these are loans that originated between 1987 and 2022. Okay. So there's about, you know, that's a 35-year kind of stretch between some of those. Yes, fewer of the 1987, but I wanted to throw that in there for you. The interest rates range from 1.99% all the way up to 15%. Okay. The BPO dates for the mass majority, okay, except for one, is the BPO dates on values is anywhere from 2022 to 2024. So relatively recent BPOs for the most part. I put that asterisk because there was that one that was way back. Okay. So I don't want to say everything because somebody's like, well, there's one in there. The unpaid principal balance average. Now, this is across all 187 is 109K. Okay. You had some, you know, probably a dozen very low balances, under a couple grand. Okay. That kind of threw it off. But the unpaid balance high note of the tape was just over 544,000. One asset that was the highest UPB. Okay. So you had some, you know, stuff that was all, you know, perfect for first-time home, you know, note buyers, note investors, stuff like that. Did I put the I didn't put the average BPO in here, but I'll get to that later on. That's what I was forgetting. But anyway, you'll be able to see that when we look into it. Next due dates for the ones that are not behind, relatively recent in the last few years, 2018 to 2025. There obviously is about a good third of the tape that's 2025, but most of that's usually a little older than 60 days late. And when you have a modification or payment plan that's in 60 days behind, they've already been modified, you know that's going to eventually go to non-performing beyond 90 days. Out of the 187 assets, 183 are owner-occupied. One is vacant, and then the other 3 are unknown. The sellers provided 12 months of payment history on this portfolio. Okay. There are 186 first liens. That means 1 second lien. There's always one thrown in there, which we won't probably spend any time on. So we'll take it off. And then out of the actual property types, there's 179 single family homes, single family residences on the tape. There was a couple condos and a couple PUDs. And I think there's 1 mobile home on land, if I remember correctly. But we'll see that here in just a second as we go through the tape. But I wanted to alert you guys to something coming up here in the next few weeks. There is our next one-day class, our next Note Weekend training class. And we kind of call it the Cliff Notes of Note Investing. That's this Saturday at 10 a.m. Central Time. It's on Zoom. We'll go through how we find, fund, and flip non-performing notes. It's our Cliff Notes for a larger class. But you can get a free ticket to Note Weekend. And yes, we'll host it this Saturday. We haven't hosted the last 2 months because of it being the holidays and stuff. But landed on things. But you can go to noteweekend.com and get signed up for that free one-day class. All right. So noteweekend.com. If you've been through it, you understand, hey, it's a great little class for you. It's about a 3-hour, 4-hour class, depending on questions. And we go kind of through, like I said, through the higher end of our training. Now, I know a lot of folks are like, hey, Scott, can you send me the link to the webinar? Can I get access to the tape? And unfortunately, for many folks, you're going to get a no on that. Okay. We don't just blast out tapes for people to take a look at and run with joker brokers. My relationships are very valuable to me. Okay, my sellers don't have a problem with us doing breakdowns to encourage bids on stuff like that. And people are like, well, how can I make bids if I don't get the tape? Well, here's the thing. If you want to get access to tapes on a regular basis, stuff that we have available that you can cherry pick, make offers on, stuff like that, you're going to need to sign up for our WC and our monthly membership at $97 a month. That's and it includes access to tapes, trainings, coaching calls, one-on-one calls with me, as far as if you've got a question, you're going to get a quick answer to it, stuff like that. Not our one-on-one coaching, but our definitely some coaching calls. It also is a nice thing is we throw in access to some of our virtual workshops as well. So we have our upcoming virtual workshop is July 25th through the 27th. This is a 3-day note buying workshop, full day on how we find deals, a full day on funding and marketing, and a full day on the exit strategies and how to make money as a note investor. And you can get signed up for our membership for $97 a month at noteumbrella.com. If you want to get signed up for the workshop, you can. It's $9.97, but you might as well get a better price and a bigger bang for your buck by signing up for the monthly membership and $97 a month. That gives you access to tapes or message boards, a whole kit and caboodle of things to help you take your business to the next level. Well, Scott, I can log on and take a look at tapes on PaperStack or JKP Holdings. Yeah, you can if you want to go look at that crap. I wouldn't waste my time with it, unfortunately. And I'll say that. All right. These are stuff that comes on a regular basis, in and out, stuff you can cherry pick, pools, mini pools, all that good stuff. We are here to help you take your business to the next level if you are ready to rock and roll. If you're not ready to rock and roll, hey, don't waste your time. Don't waste my time. But if you're serious about getting a look at tapes on a regular basis, like the one we're going through today, that we usually make available on about a weekly basis, then you want to get signed up at noteumbrella.com. All right. So another couple of things here before we dive in. We want to make sure that you guys, if you're listening to podcasts, check out the #1 podcast for note investors. That's the Note Closure Show podcast. We've been around over 8+ years with that. It's hard to believe we're coming up on our 1,000th episode of the Note Closure Show. If you don't listen to podcasts, but you like to watch YouTube, then check out our YouTube channel at weclosenotes.tv. We just passed the 900,000 mark. As far as listeners or downloads, we'll probably double that in the next 6 months. The way things are going, in the next 6 to 12 months, we'll go from 900,000 to probably 2 million views in the next 12 months based on the activity that we're seeing. But get signed up there for today. It's the #1 YouTube channel, weclosenotes.tv as well. So let's get it started in here, shall we? Shall we dive in, start looking at some tapes, start looking at assets? If you're in the Zoom here, you can ask questions to me directly. And it's good to see some news. Hey, John Burns, good to see you, buddy. Hope you got my email this morning. Welcome to the WCN membership. You signed up this morning. And make sure you book a call with me. Check your inbox for an email from me directly, and then also an invite to the Basecamp group as well. Good to see everybody on here. Great rock and roll here for you. All right, let's take a look here and get rock and rolling. All right, let me share my screen here. Let me pull up the spreadsheet. Where is it here? All right, so what I'm going to do here, boom, let me go ahead. I'm going to go ahead and hide these 2 columns because we can do all of our due diligence without the addresses and the borrower's name right now on the front end side. Okay. Let me hide those. All right, so we have the full information. If you're in the Basecamp group, you would have already gotten the spreadsheet, like I said, last Wednesday to take a look at, to dive into, and we'll get rock and rolling. And as you can see, if you don't, let me blow this up a little bit so it's a little bit easier to watch. Okay, so people always ask me, well, Scott, why are there 2 loan ID numbers? Okay, that's a very good question. A loan ID number is really the loan number, and you'll often have 2 different loan numbers, one for the servicing company who's servicing the note, and then a second loan ID number for the ownership. So like when we have notes, we have 2 IDs. We have our internal loan ID number, and we also have our servicing ID number. Now, a lot of times it may be similar. It may be the same thing, but depending on what's going on with it, it's usually just the loan number ID, okay? And what's great about this tape, it's got a lot of information. It's got the milestone amount. So the milestone means where they're at in the process, whether it's, like I said, BK Chapter 13, subperforming, non-performing, subperforming, all that good stuff. And we'll go through each one and tentatively break it down for you guys to give a bit of an idea and a feel for where you would bid on this stuff. You can see if there's a bankruptcy flag. That's what BK stands for. It means it's been in bankruptcy. The chapter, the 13, you see a lot of 13s. You see 11. There should be 1-7 down here. Yeah, Chapter 7 right there in California. The BK case number, that's important for you to jump on over to pacer.gov and take a look at it and download all the information you need for it. The BK filing date, when that BK was filed. We have obviously the borrower's information. I'm not going to disclose that here. YouTube doesn't like that. And the address. If you want the address, hey, guess what? You can take a look at it later when you get signed up at the city, state. One of the things I did here, as well as I inserted this column with a number and state, so I have an accurate number on the state-by-state breakdown out of the 33 for you guys, so we don't really need that anymore. I'm just going to go ahead and get rid of that. You have the zip code, and then you get into where you're looking at the BPO values. And like I said, BPO values range from anywhere from like 46,000 upwards to 1.5 million. That's the one thing I left off my slides. But anyway, and then you can see the BPO dates are all kind of relatively recent. Now, don't get me wrong. Recent, I mean, they're in the last couple of years. If it's greater than 90 days old or definitely longer than 6 months old, and there's, I mean, if there's a ton of equity above what's owed, I don't really worry too much about the BPOs based on what I can find online. Of course, you're always going to send somebody out to take a look at it, to drive by, be your eyes and ears, stuff like that. And of course, if you're going to make an offering, you're going to order a new BPO on if it's older than 90 days. But this is still kind of relatively, it's not like 1990 or 2010. We've seen some of these things that, it's a couple years old, but it's better than nothing, right? Your principal and interest payments, P&I payments. Okay, that's very important for you to understand. The taxes and insurance payment, you can see if anything is being escrowed. The interest rate on the note, obviously, the rates, as I said before, vary from 1.99% all the way upwards to 15.25. Okay. When the note was originated, the first payment was due. Okay. And let's see here. And then the maturity date, when the loan's matured, the original UPB, the current UPB unpaid principal balance, okay, any deferred principal. It means if it has anything been kicked to the back of the loan, any type of loan mod done or anything just deferred for a while. Some of these are bigger amounts, some of these are smaller amounts, okay? Any deferred interest. Oh. Any escrow advances. What is an escrow advance fee? Well, an escrow advance fee, and why you see a lot of these negative is where the lender has advanced taxes, insurance. They send out property preservation to secure the property, to mow the lawn. If the property is vacant, they go to secure it in some cases. But most of these are going to be taxes and insurance to avoid losing the property to a tax foreclosure or anything like that. Loan charges, corporate advances, kind of the same thing as well. Let's see here. Legal balance. Now, some of these legal balances were lesser than the UPB, which we found interesting. But for the most part, the legal balance was added far and above beyond what the UPB was. Obviously, on those where there's a question, you're going to go off what they provide as the legal balance that you're bidding off of, because most of these have values way higher than what their legal balance is. Okay. But you obviously will double check things in your due diligence. So when you're going through your due diligence and you're making an offer and they accept your offer, you're obviously going to want to double check the balance, not only UPB, but the legal balance, and the truly collectible balance. Meaning if they haven't paid in a while in some of the states with the shorter, what do you call that? The statute of limitations for debt collection. Some states are like 4 years, some are longer. So those are at 4 years. If they haven't paid in 5 or 6 years, you're only going to be able to collect on 4 years of it. So you have to understand how to credit that legal balance. So something to keep in mind. Each state's a little bit different. Obviously, guys, we're not here to overwhelm you. We just want to give you some ideas. So you have the next due. You can see some of these are pretty recent, relatively recent. Some of these are relatively a couple years old. All right. You see a lot of these have been modified in some sort. The mod dates on these. So a big majority of these, obviously, were COVID mods. Some of them are newly mods. Of course, we have the current occupancy, vacant, owner occupied, unknown, property type, single family. And then what's also really nice is you have the last 12 months of payment history on this spreadsheet. So that gives you a good feel for if the borrower is making on-time payments. I mean, if the borrower hasn't made a payment in 6 months, well, they're 6 months behind. Not hard to figure that. If a borrower made a lump sum payment 2 months ago, but hadn't made anything in the last 12 months, well, then they're probably caught back up. They're more motivated to stay into it, and you can play that game. This is one very important thing, because a lot of times, sometimes sellers will say, oh, yeah, they're making payments. Well, if they've been hit and miss for a while, they're not necessarily like this one here. You see where they made $4,500 payment. That's like 10 months of payments in June. And then they missed 2 months, made a payment, missed a payment, made a payment, made 3 payments, made a payment, double payment, made a payment, missed a payment, and then made a payment there. So it gives you a bit of an idea. Like this one here, they just made a huge lump sum payment on May of this year, just less than 60 days ago. So the tape is based off of a June date. So it's not, we don't have the June payments. We obviously don't have the July payments, so it's only being July 7th. But it gives you a bit of an idea where the most motivated ones, like this one, is really paying down. It's really done a great job. All right. All right, let's keep moving on here. You have liens, first liens, if it's a fixed arm or adjustable rate. It tells you when the next rate increase change. I don't really dive into that much, too much. You see rate change period 480, 360. I mean, if it's a 40-year mortgage. Then you also get into FICO scores, which is not so bad. Especially if it's, I don't have the dates of that when those FICOs are pulled, so I kind of disregard those. 12-month pay strings, you can see if they've been paying on time or they're not paying on time. Cutoff date, there you go. This was pulled as of May 31st. So it was pulled off just over a month ago. And you can see where they're kind of falling into their categories. No payments, made a payment from this such and such date is when the dates are being advanced to. So like this one, you see this was paid on, this payment came in, it was credited towards January 21st of 2025, which is when it was paid, okay? This one, let's see here, I'm gonna go find a different one on here. So this bar is way ahead, this, January 27th, oh, yeah, so that, let's look here, there's another one I want to give you. All right, so here's what this one, see it says 2024, so they're actually, as of January, they're about a month behind. You see, you made a payment here. They got credited April 7th, and they're behind for basically May and June now, I guess you could say, basically, depending on where it is. But anyway, that's nice to have. I always like to double check that. You see no payment, no payment, no payment. Okay, they're not making payments. Okay. But that's also really good to have. And this one actually goes back to, actually, so 2 years of kind of the stats of payments there for it. But we always like to look at what they've been in the last 12 months. Okay. All right, let me go make sure, do one other thing here to my spreadsheet. So it's a little bit easier. We're going to put some borders around the column so it makes it stand out. How is the font? You guys can actually comment and ask me questions directly. Does it look okay to you guys? Can you see it so well on your phone or laptop, wherever we're watching? I can make it a little bit bigger, but it makes it difficult to flip back and forth. I don't want to confuse anybody. Font is good. Thank you, Judy. Hope everything is well up there in Maine. All right. So the first thing we like to try to do is let's kind of coordinate these and make these, as we like to say, tapes, because usually you have what I say in a tape like this, where you've got performing and non-performing stuff. It's really 2, potentially 3 tapes within one that you've got to figure out, especially when you start running numbers of what's going on. All right. Thanks, Real Stony. Very legible. That's what I like to see. Okay. So let's do a couple different things here. Let's go over here and let's rank these by the milestone, okay? So we have all the kind of the performers and the non-performers together, and that way it makes it a little bit easier when we're doing breakdown on this stuff. A lot of times you're not going to see a milestone. I mean, you will sometimes see milestones on tapes, but a lot of times it may not be this further close up. It may be buried further back in the tape, like on column number 30 or 40. So that's where you run into some issues like, oh, I've got to figure this out. Okay, so let's do this. Let's go first. Let's coordinate these. We're going to custom sort these. And we're going to change this not from the loan ideas to the milestone. Just do A to Z. So now we have the BKs really all in a row there. Okay, BK7, BK13, BK11. Okay. Now, do I like to get rid of some states? Yes, oftentimes I like to get rid of some states that I'm not going to waste my time with, okay? Now, we have been getting a lot of people looking for stuff in like New York, New Jersey. I don't know why, but they want to own that stuff in there, okay? I don't necessarily like to look at that stuff. It's just me, better bang for my buck in other places. But is anybody that's on here with me live interested in New York or New Jersey? Or can I go ahead and remove that stuff off? If you're interested in New York and New Jersey, just make it a comment. We'll leave it in there and go that route so you have a bit of an idea. But New York takes 3 years to foreclose. New Jersey can take 2 years to foreclose unless it's a vacant asset. Those are a couple of things I'm not just a big fan of. So if I'm not seeing anybody saying yay to New York, we're getting rid of it. Going once, going twice. All right, we are going to get rid of the New York, New Jersey assets very quickly to make it easier for us. All right, so that's probably going to drop some of the bigger values down too, which is fine. New York, New Jersey. All right. Okay. All right, so now that got rid of Well, 27 assets, 28 assets. We're at 158 assets. Okay, that's good. All right. And you can see a lot of these. Yeah. So 60 of them. Yeah. All right. Okay. So the next thing I like to do is let's run some numbers on here to make this simple for us. So let's go over here to the P&I payments. All right. Payment interest and what they should be paying. So we're going to insert a column in here. 12 months. Because remember, they have 12 months of payment history on here. So what we want to do is review, okay, what should they be paying and what have they been paying? So if what they have been paying is way above what they should, the minimum they should be paying, that's a good asset to go after if it's a performer, right? Because they're paying more, right? If they paid less than what they should be paying, then there's probably hit and miss of some sort. Okay. So that's why we look at that. We're just going to take the P&I payment and multiply it times 12 months. Okay. And we're just going to copy that formula down for the remaining here. And I'm going to go ahead and stretch that out, make sure everybody can see that. We'll see this one made $23,000 in payments in Lake Worth, Florida. They got a BPO of 854. That's a pretty good size house. So yeah. So any column that I insert, I like to highlight in green so I know that I inserted it. Okay. All right. So that's been inserted. So people know, especially when I post this tape back into our WCN crew and our members area, they know that, okay, Scott inserted that. That makes sense. I can understand that. Okay. So we got that. Now let's go over here and let's do the same thing for the last 12 months. Total payments last 12. All right, and all we're going to do is we're going to do is equal to sum. And we're just going to go over here from May, go all the way back to June here, and then enter. So you see in this first one here, they've made $4,718 in payments, which means they made $3,700 in March, and then basically $497 in the last 2 months. So they've got some motivated because they got some skin in the game. And if we look at what their P&I payment is, their P&I payment is $248, 30. So they're technically really making like double payments to get caught back up. Okay. Let's do this. Shrink some of the stuff down. All right, now that we have that number, we're going to go Control C, and we're going to copy the formula all the way down for the rest of them. Okay, escape. All right, now that you see some of them that been making payments. Just about everybody has made some sort of payment in the last 12 months. Some haven't made payments, or they made a few payments, but it's a good, just kind of a good measuring stick. Okay, what should they have paid and what have they paid, right? Okay, so let's insert one more column. We'll just say number of payments made last 12. And all we're going to do is just go here, okay, take the total amount they paid, and then divide that by what their minimum P&I payment is. So we see like they've made 19 total payments in the last 12 months. So they've paid some extra, right? Is that making sense, everybody, how we kind of figured that out? All right, now what we're going to do is we're going to copy that number and go all the way down. So anything that falls under 12 months, guess what? It's really non-performing, right? And we're going to shrink this number down to let's format cells here. We want to 2 decimal places. That's perfect. There we go. 12,000. Okay. Good question from somebody on here. Great. All right. Just saying it's good. Okay. So now you've seen where they've made less payments than they should have, or they've made more payments than they should have, right? So now let's go back over here. And what I like to do is, okay, let's look at the next step of where they're at legal balance. Now they gave us a legal balance. So we're going to use that as our base figure for what we can collect on based on that they gave that to us, right? The UPBs may be higher, but for the most part, the legal balance on these is above what the UPB is, right? Okay, so let's insert a column here. Now, yes, I know the BPOs, some of these are outdated, but we're just going to look at these as these values have probably gone up, and you're going to verify those in your due diligence period. We're just going to use this as a quick starter. You would probably want to double check on Zillow to see if it's higher than see if if the BP has gone higher than what it shows on here. If the BP is lower, you check that before submitting your bids. Okay, so let's just look at your next cell. Excellent wizard. Thank you for the dad humor there, Real Stone. You've done a lot of it. We spent a lot of time trying to go slow for you guys so you can understand that. And that's why we like to save these spreadsheets back into the base camp when we can, when bids are due, so people have an easier way of going through it. They don't have to reduplicate our spreadsheet work. All right. So let's look at, say, let's do equity amount. So what we're going to do is when there's an equity amount, obviously we take the value of the property, the BPO, the most recent BPO number they have on there. I may be over on the wrong side over here. Yep. So we'll go over to the left side here. All right. So most recent BPO. BPO. There you go. See? BPO 187 minus the legal balance. All right. So that gives us a equity amount of this one for 130. Makes sense. 187 minus 57, 130. And we're going to copy that formula down. All right. And now most of those have equity. There's a few that are negative equity. Okay. A few that are negative equity, not too much. So let's, like I said, is I like to insert these and color these columns in green. And there's another one I forgot to do. Green and green. All right. So that's a good aspect of that. All right. All right. So when there's equity, sellers don't want to sell at too big a discount because they realize the borrower doesn't pay, they'll foreclose and be able to take these assets back. Now, in the BK Chapter 13 plan where they're paying, that's a beautiful thing, right? They're often going to want roughly about 80% of the legal balance anyway. Most of the time, sometimes they go to 85, sometimes 90. It all depends on the interest rate. So we're going to run some formulas and then readjust them as we dive into individual deals to see if it makes sense. Okay, everybody? So since almost all of these have equity, let's do this. Let's custom sort this. Custom sort. We're going to do it by equity amount. And we're going to do smallest to largest. Hit OK. Okay, that's still, oh, yeah. So that you see some of these have negative equity, and then a lot of these have, mostly will have a ton of equity. Okay. So where they have negative equity, we'll talk about that in a second. But let's go over here and insert, and we'll just say when there is equity, we're going to say 80% of legal. Okay, now I'm going to skip down here below negative equity. Now the 4,500 don't really worry about too much. These where they're at, under 11. Usually I look at 20K in equity and above, because we all know 20K in equity can vary a little bit on values depending on when the values are pulled. All right. So we're just going to go down to 20K here in equity. Legal balance is 42. It's worth, it's like this one down here. 20K in equity, it's worth 42. That means they probably had, it's valued at 62. Okay. Yep, 63,044. Okay. So going from that one down, we may bump that number up to where it's up to 11,000 equity and run the same formula down. We're just going to say what's 80% of legal on these. That's probably roughly where they're going to want us to come in at. It gives you a little bit of an idea. Okay. So it's equal to that number, your legal balance, 42,000.83 times 0.8. Now you're going to adjust that formula as you dive into it a little bit more. Okay. These are just guidelines when it comes down to it. Okay. So we're just going to copy that formula all the way down, because a lot of these are in some sort of payment plan, and you're going to adjust by looking at them individually. So, okay, Control V. The column's highlighted in green, 80% equal, legal. All right, so negative equity here. When they're upside down, we're going to say 5% of negative equity means they owe more than the property's worth, BPO. Okay. So in this number, we're going to go over, it equals to the most recent BPO. See, this BPO says 65, and they owe 64,000. Oh, legal balance, sorry, is not 64. It's 107. That's why they're upside down. Is equal to, okay, so let's go back over here to the BPO date. BPO number, sorry. Times, we'll just say 0.65. Now, some of these have, 45,000, 46,000. We would adjust those numbers down just a little bit. Okay. But 0.65, you're buying an individual note. Okay. All right, support 42.5, Control C, and we're going to roll that down. Okay, so you have kind of what a rough bid would be. Now, what we would do next is figure out, okay, we know there's a rough pricing guidelines for negative equity assets and those that have positive equity assets. So now what we can do is, if this is roughly what they're looking for, 85, 65, 80, now we can take a look at what their 12 months P&I payments should be and take that number of what the minimum we get in and divide that by what our rough offer would be to see if it makes sense. Now, we'd also, since we've got 12 months of payment history, we're going to redo that as well with a second column that takes what they all have paid total. Some have paid double, some have paid more than 12 months, and put that in what they've realized in the last 12 years. So hopefully what we would get in a 12-month performer note versus what we were actually getting in seeing. Okay. So let's go over here. I haven't even, besides looking at New York and New Jersey ones, getting rid of it, I haven't even looked at the properties. I want my due diligence up front to be more about the numbers so I can identify the better assets out of this tape. Now, I could get rid of every state I don't want to buy in and focus it on Indiana, Ohio, Texas, Michigan. There's only one in Michigan. We're also Missouri, Kansas. I could focus on the states that I only want to buy in and just look at those. That's one way you could do it as well. But I like to kind of look at stuff in other states that I can take a look that makes sense. When you're starting off, you should focus on really 3 to 5 states. And your home state should not be one of those 3 to 5 states. Now, I'm in Texas. I'm in a Lone Star State. There are 22 assets in this list. That's kind of nice. All right. Stuff in Texas is usually going to go for more because it is such a fast foreclosure state. All right. Georgia is probably going to go for higher than values. But one of the things to take a look at is looking at some of these balances. Some of these balances are really, really small. If we look at the legal balances on here, I could probably get rid of some of these. I wouldn't want to waste my time with 9,000. Okay. 3,000, probably not worth my time. Okay. But it might make sense for me to buy those and put those in a self-directed IRA. How many of you guys are trying to put some money in an IRA, or have an IRA with 25 grand or 50 grand or 5 grand that you started that you want to get to work? You're looking for something to put to work to get your IRA moving versus just sitting there. Raise your hands, give me a high five, give me a dollar sign in the chat roll for you there. Just so I know that. So yeah, Judy, I know you. Yep, Judy, know you are definitely. That's great stuff. All right, let's go in here and then do that. Let's insert some of these. All right, so let's just say estimated payment ROI. if it's just based off what they made payments, okay? All righty. So now all we're going to do is take what they should have been paying, the 12 months. Remember, it's in that green column over here, 12 months P&I, and divide that what our offering roughly would be based on just if there's equity or no equity, okay? All right, let's change this to a percentage amount, percent, and we're going to copy that down. All right, so now we see, especially in some of these lower balances, you start seeing our ROI is going up pretty good because they're making payments. Now, obviously, they're not going to make more payments than what's due based on the balance stuff, but it still gives you a bit of an idea that, hey, you're going to make some money on these. Some of these are pretty good returns where the legal balances are smaller and things like that, okay? All right, now the next thing to do, as I said before, is let's look at actual payments. Since we have that in here, let's look at actual payment ROI 12 months. Okay. Now remember, let's do this. So we're going to take what they actually have paid. I believe that's over here. Total payments last 12 and divide that by our offering price. Now, past behavior is not an indicative of future performance. Let me just state that right now. I'm not an attorney or a lawyer. This is all for purely entertainment purposes, but take a look at this. But you should always take a look at this. So now the great thing is now you can really kind of sort these by what they should have been doing and what they've actually done. Okay. Then you can do the loan level breakdown like, oh, this, they got a low interest rate. I don't want to waste my time on low returns. And that's the thing to help you identify, like, okay, these the ones that have the higher ROIs as far as payments coming in, those would be the ones you'd probably want to target for performing. If you like non-performing notes, the ones that have zero on what they should have been actually paying because they haven't made any payments or paid lower payments, those would be more ideal for foreclosures in a lot of cases. Does that make sense, everybody? Can I get a thumbs up from those that are watching here or watching live? Real Stony, Eleanor, everybody else on YouTube. Thank you, Judy. Who else is on there? What Steven, what do you think of that? Jay, John, Fernando, DD, Cliff, Albert. Who else is on here? Steven. What else? It should make sense for you, right? Kind of help you identify some stuff. Awesome. I think I'm getting it. I think I can. I know you can, DD. I know you can get it. All right. But this is what we do. We look at spreadsheets all the time to find those nuggets, those deals that we can make an offer on that makes sense for us and makes sense to the seller. Now, some sellers don't get me wrong. They will be greedy. Like this one here, oh, they've made 121% of what they should have paid. Yeah, but I still got to buy this $42,000 or this $107,000 note at a balance that makes sense for me. It's got to be a win-win. A win that they have a price that they are comfortable and a win that gives me a good return. It can't be win one side. That's not a deal. Okay. So now what are we going to do? Let's go back here. We're going to resort this one more time. Custom sorted. And change it to actual payment ROI in the 12 from highest to lowest. Okay. Where is it here? Actual payment ROI 12. And we're going to do largest to smallest. All right. So now this gets into like three. Okay. Some of the stuff is all going to be low. Yeah. So they've got like low balance stuff. Some of the stuff is pretty. So like this one. Okay. Let's first look at this one here. Okay. Where is this located? This is located. They only owe 90. Their legal balance on this one is 62. And it is in Washington, D.C. Okay. That's one of the higher ones, and I don't want to really own anything in D.C. right now. So that would be a reason for me to get rid of that one. I mean, you could pick up technically, they're making payments. They're supposed to make $16,000 a year in payments, and they are making They made 82,000 in payments this last year. They made 1337, $78,000 in January of this year. So they had made payments for some time since then. So they made a huge lump sum, and they basically made 3 or 4 lump sum. They probably haven't made their payment yet, but if somebody puts $78,000 down, yeah, that's not so bad. But you're probably not going to see that again. Can we agree to that, everybody? They put their $78,000 and they're making their $1337 a month. So if they just make their existing payments, let's see here. Their monthly P&I payment is $1336. So if they just keep making, there we go. All right. So if they just keep making their $1337 a month payment, and you can get this at $50,000, that's about a 32% cash and cash return because they're making their monthly payments. Now, when does this mature? You'd want to look at the maturity date, stuff like that. So let's look up here. When was this loan originated? Does it say here? So it matures in 2033. So it's going to mature in 8 years. Here, you're on the backside of it was first done in 1930. I'm sorry, 2003. So it's a 30-year mortgage, and they got 8 years left. So yeah, you're going to whittle down a little bit on that, but I would stick to that. I wouldn't go below that, but that could potentially be a pretty decent note. Therefore, you bring it in. You want to run through the amortization calculator, of course, as well too, and see what the issue was and where that 78,000 came from. Was it a payoff? They sell a house, something like that. But that's potentially, you put 50 grand together, you're getting a 32% cash and cash return. This upside isn't going to happen again because they're probably not going to put $78,000 down. But even if they did pay you off, if they paid you off at 62 and you paid 54, you got $12,000. That's a 24% cash and cash return if they pay you off. Now, what is their underlying interest rate on this? They're got a 618 FICO, 6.125. Okay, it's not a bad interest rate. Okay, so we're going to highlight that one and go back and look at it and see where it's located. Okay. All right, remember, we're just looking at numbers. We want our numbers to dictate what we're looking at long term. We don't want to sit here and fall in love. Oh, that's so cute, when the numbers don't make sense in a house for that way, right? All right. Let's go over here. Let's see if we can't find some stuff that also looks pretty good both sides. This tells me they've made a lot of payments, and it tells me that I'm business. So some of this lower balance stuff I'm not really too excited about. Let's go down here. Okay, so like this one. This one's upside down. They owe $43,000 more than it's worth. Where is this located? They have made, oh, here's another one. Okay. This borrower has made 12 months of payments at least, but they've also made a total of 132 payments. They're really trying to pay this loan. They just paid 16 grand, just under $17,000 in May. They owe 107. No, yeah, no. So 65. So yeah, legal balance is 107. Oh yeah, this is okay. This is where the value of the property was less. Okay. Yeah, 65,000. It's in Alex City, Alabama. I don't know where Alex City, Alabama is, but it looks like somebody's trying to pay their loan off. Okay. We can look at the initial. Let's do this. Alex City, Alabama. Put that in green. Take a look at that one. All right. Kyle, Texas. This one is just down the street from me. Kyle, Texas. It's performing. Let's take a look at this one. BPO 245. Payment's only $270 a month. Oh, they got a low interest rate. 6.25. So, all right, this is another thing that's got about 8 years left. Let's see what this one looks like. Okay, UPB is only 30. Legal balance is 26. Yeah, this one could be a pretty good one too. They only owe 26, so if you paid 80 since the doctors all that equity, they're likely to pay it off or pay you. You get a 15% cash and cash return, paying 21 for assets that's worth 245. in Cal, Texas. Now they've obviously been paying. They modified this back in 2022. In the last 12 months, they've made 80 sets of payments. So they paid 13, 37. Yeah, because there was 245. This one is really, some sellers will say, hey, they put a chunk down. This is when it's kind of hit and miss. Okay. Yeah, they put a chunk down 90 days ago, but if they've missed April, May, and if they missed June and now July's payment, they're back in non-performing status. Okay. That's where you could foreclose relatively quickly here. And get 26 or 27 or 30 on a 20. You know, maybe you make a little bit less payment. But I'm gonna highlight that one in green. It's not really performing if they haven't made months of payments. Okay. That's why you always got to go back when they provide 12 months of payments. Look at, they're not performing. Now, the one thing to look at would be when they're, actually, let's look back here. Since they did give us a C on this one, I know I'm flipping back and forth a little bit, guys, sorry. But let's see if they actually, if that 13,000 actually is them paying extra into the loan. When's their next due? Yeah, see, okay, so here you see, when they made their payment, yeah, okay, so yeah, see when they made that lump sum payment, it went back to January. The next one was March's payment here, March's payment. Yeah, so they're behind. They're technically they haven't made another payment. They're at least 4 months behind. All right, so that would be one to I'm going to highlight that one in yellow so that you know you probably need to bump it down a little bit, but it's still a potential deal flow for you, right? Okay, let's go back over here. And, you know, that one's not so bad. Kyle, Texas is just south of me here, right off I-35. A lot of up and coming growth. Let's do this. What the heck? Let's do this now. Actually, we'll do that in just a second. All right, let's go back here to the ROIs. Again, that are going to judge our offers. It's all numbers based. Okay. Whoa, this one stands out, 83 and 88%. And they got 170. Oh, so yeah, because the legal balance is all small. Not gonna waste my time on that. Legal balance 14. Legal balance 60,000. They got 109,000 in equity, so it's valued at 170 roughly. Get a 14% return. They've paid based off of they've got a 54, so they paid some things as well. So all right, let's go over here. Yep, see, they made 4 years of payments roughly in the last 12 months. They paid, yeah, 25 grand in payments, 14. And this one, look at this. They paid 1449, 1449, 1449. 9,700. They paid a chunk down in January. Okay, they paid 6 months of payments there. So they just paid what they're supposed to, 14%. That's not a bad, that's a potential deal there. They're probably not going to come down from that 48,000, but that's still, hey, we'll take a look at that. Okay. How are we doing, folks? Everybody doing well so far? Good. All right, let's move on here. Let's keep going down here. What else do we see as these yields? Look at this, 22,000. Yeah, they're not going to let that go. 17. Let's look here. Legal balance 113. Okay, here's one. They got a little bit of equity, but not much. 6%. No, that's not a good yield based on if they just, I mean, they made 39%. Here's one that might make, okay, let's see what they've been doing. They're making double payments. They made 78 months of payments. So they paid 6 years of payments. Okay, look at that. They made 31,000 in November and have been hit and miss since. So that got them caught up. What is up with no payment, no payment, no payment? What is up with this? I wonder where that 31,000, it should have said let's say November, 37,000 November. I'm going back here. November, no payment. Huh. Okay. Where is this located? This is located in Pittsburgh, Pennsylvania. Yeah, I'm not gonna waste my time. Um, let's look at the one above it, San Antonio, Texas. I probably skipped past this. Okay, so they're supposed to be making 233 a month. They got a BPO of 260. And they got a small UPB of only 9 grand. All right, yeah, I mean that would be pretty secure, making an $8,000 bid for a $10,000 legal balance, and they're making payments, pay you off. 234 a month. Yeah, see, 234 made 3 months of payments, 4 months of payments. Pretty, pretty stable. They're making payments get caught up on. If you like a good, solid, yeah, I mean it's a pretty good return for the low bounce. It's only going to be for a couple of years, but we could put that as a yellow. I would look at that because it's local. If they don't pay, then I can foreclose quickly and get paid off in full at the auction because you know something like that's going to get paid off the auction. Yeah, Real says $31,000 lump sum and went ghost. I bet their name is Lump Sum. Yeah, that's funny. That's really kind of funny. Good stuff. All right, let's go over here back to our ROIs. All right, that's it. Maybe on that one. Okay, so this one, what I like to do is see a higher yield on base what they're supposed to be paid in this one. So 24 and 33%. And 80% of legal is 30. Got a ton of equity. Where's this located at? Columbus, Ohio, one of the hot up and coming, states doing well. Okay. Interest rate's 9.84. That's always nice. It matures in 8 years. So yeah, you're gonna get some decent cash flow for 8 years and get your investment back. Or sooner if they refinance you out based on their interest rates. Okay. So they've paid 16 months. Okay, so here's the thing. Lump sum miss. They're kind of scratch and dent. You might be able to, since they're, 2 months behind. If they made a payment, great. They're kind of hit scratch and dent on it. You could probably get it for less than, make an offer, say maybe 25 to get a little higher return. If you're okay with them missing a payment here or there, your servicing company's going to help out collect on that stuff. But let's go ahead and highlight that one. That was not bad. Now, Ohio is a 9-month foreclosure state. They maybe know that. Maybe they know that it takes a little while. We'll miss this month and double up next month. Or maybe they're self-employed and their money is based on what comes in on that stuff. There's a couple different things to look at during your due diligence, but that's not so bad. Okay. So let's go back down over here. All right. $29% and 30%. Okay, so what they should and what they have is pretty close to the same. They owe, legal balance is 20. You're only gonna make an offer for 85, 80, 60%. So where's this located? Yeah, that's not so bad. I mean, it's I would I'd get rid of Chicago, Illinois. Sorry. I hate Chicago. Don't buy there. Sorry. Somebody's hit and miss like that. Nope, not gonna do it. Yeah, see, they've missed payments. They make a double. Yeah, no, I just don't deal with Chicago. Big red X. All right, let's go back to the yields. Home again. And now you'll start seeing like this one here. They've supposed to make 32, but they only been 29%. So they missed a little bit. Okay. Legal balance is 16. Yeah, low. That's what you see with some of these lower balances. All right, let's go down to a bigger balance. Okay, so this one's only got a little bit of equity. Legal balance is 138. It's worth 151. Pick it up for 100. Yeah, see 7%. Not a real good return. I mean, it's not so bad. A lot of people can't make 7% their own. But they've made payments 23% ROI based on their payments. So let's see what so they made 3 years of payments in the last 12 months. And most of that's off a lump sum, 2 lump sums and then hit and miss. So it's really not performing. Well, let's look at here, March. Let's go see when the March payment was credited towards. See, that's another one that says no payment, no payment, no payment. So it must have been credited towards older payments. They're further behind. So it's not really performing. Hazletown, Pennsylvania. Oh, it's a BK chapter 13. That's probably why they're making lump sum payments like that. I just don't like it when you don't get steady payments, people. You know what I mean? All right, let's do this. Let's go down and flip the switch to the ones that are on the bottom. For those that are non-performing, okay? For sure, let's go down here. 0%, 0%. Okay. All right, so if they did make payments, let's look at these last couple here. Where, first of all, are they in states you don't mind foreclosing in? Pennsylvania. Let's look at the Miami, Florida one. Chicago, no. Edinburgh, Texas. Okay. We'll look at Edinburgh and go from there. So that's a faster foreclosure state. Okay. So BPO is 104. BPO is a couple years old. So it's going to be worth more than 104. TI is 345 a month, 346, 6% interest rate. Okay. Oh, see, it's supposed to what the heck is this? Okay, so this is modified. See, the note date was for 2006. First payment due is 2022. So this is a COVID modification. It was extended out to 33 years, I guess. They owe 58, is what that says there. Legal balance is 52, so there's something off a little bit there, but they basically got some equity. Okay. If I pay 42,000 for $52,000 legal balance, okay. If they do make payments, I'm going to get a 10% return. Not exciting, but the idea on this is you're probably going to foreclose on this one. Owner occupied, single family. And they made one payment in May. Okay, so here's a lesson. One payment in August. This is a borrower. Okay. So they've only made 600. I would not have accepted the 346. Because look, they're 9 months behind, right? They're actually really 10 months behind. And them making a payment for 346 in May resets the statute of limitations as far as the ability to foreclose, right? They need to fall 90 days behind. Well, sound that so you've accepted one payment, you can't foreclose until they're 90 days behind now. So that would be August of 25th. So next month. Now, if they made a payment in June and July, they're technically okay, they're back on track. But this is a non-performing borrower, still only made 3 months of payments in the last, really the last year on that. So I would go, if we look at this one, I wouldn't offer, yeah, you're still gonna have to be at offer. Okay, so 41,000, they owe 52. I would drop this down to a lower bid because I believe this is at 80 cents on the dollar. Yeah, I mean, they may not take less than that. Edinburgh, Texas. Let's do this. We're gonna let's pull this up. So you buy the note, you foreclose, you get paid 10 grand at the foreclosure auction. If it doesn't sell, then you end up taking this property back. It's worth the 164. Okay. Let me jump over here to the internet. Just so you guys know where Edinburgh is. Click on the map here so you can take it out. There you go. Cheeto's TV repair. It's down in the valley. Yeah, see South Padre Island down there. All right, it's down near the valley. Okay. And this photo is from May of last year. So it's a greenhouse. Yeah. And a nice house across the street. We got an older house. There, let's go back. $1,330. See, it's worth 125. Yeah, I would ask. Yeah, it's built in 1999, half acre lot. the thing itself is written down there pretty good. They give us a rent rate, yeah, somewhere around $1,500 a month. Okay, so you have pretty stable valuation down there. You sell it at auction, you buy it at 42, you sell it at auction and get, dump it, let somebody else. If you take it back, it's a decent little rental. You're gonna put some work into it, but you've got a ton of equity if it doesn't sell. All right. So let's go back to spreadsheet. So that one, I'm gonna highlight that one because hey, I don't mind that. I got, got some other stuff down in the valley we're working on. So we're gonna highlight that one in yellow. Okay. Let's look at the one in Viva La Miami here. All right, this one's worth $490,000. 3% interest rate. Where is it? They only owe 300. Where is it? Did I just screw this thing up? Hang on here. Sorry, guys, my mouse is acting a little funky. Yeah. All right, what did this one say? So they haven't probably made any payments. Yeah, see, 1%. When do they make a payment? So they just made 2 months of payments. Yeah, I wouldn't buy that one because now if they start collecting payments again, then you're into this thing and you're not making a really good return. So if they're supposed to make, yeah, you only make a 4% return if they start making 12 months of payments. Yeah, and now you got to wait. So I wouldn't buy that one at all. I mean, let's just look what it looks like. No, because Florida's got about 12-month foreclosure process, so you got to wait. Let's go back here to the map. What does this look like, man? Oh, okay, it's an older house. Yeah. Put on a street blood. This is a photo from July of last year, so it's a 1-year-old photo. So I think it's owner occupied. Back to our spreadsheet. Of course, you can look at the borrower's name and see what age they are. Yeah, first payment due is 2018, and then maturity date's 2065. So what is that? A 47-year mortgage? So it had been modified at some point. Next due August 1st. So no. They let them reset. Single family was modified. So yeah, this is modified in April. That's why they've made 2 million. That's a no. See, I love how they say performing. No, that's not accurate, people. Well, maybe it's performing if they make 2 months of payments, but I'm an investor. I have to go in realistic aspect. Yeah, they made a new mod. You better hold on to that one. So no, not interested in that one. Let's look up here. And let's go to Indianapolis and look at this one. Okay, BPO is 105. P&I payment's only $78 a month. Oh, how can it be that with 9.13? Oh, they probably have a very low balance. It's the BPO. I'm sorry, UPB. Oh yeah, original UPB was 21,000, 6,900 UPB. Yeah, deferred principal 33,000 the back end. Legal balance is 40. I got some, paying 32, 3%, 3%. Yeah. Yeah, I don't want $79 a month. That would, they've paid $79 a month, but that dollar amount P&I payment would kill, is not worth it based on servicing costs. So that's one thing you should do, and I forgot to do that because we're going through the things else, is going and looking at your P&I payments and getting rid of anything really below $250 a month. So let's just do that while we're here. Okay, so there's some low balances. $43 a month. There's that $78 one. 104, 108, 146, 146, 152. Yeah, it's not really worth your time. Now, if you're gonna be using other people's money, obviously you want to be making more than $250 a month. Let's get rid of that. Unless you're using your own money and you're happy with that's completely fine. So that selected these that all have low P&I payments, right? That San Antonio, Texas, low 233. That was the one that might make sense because they've been. It's yeah, yeah. They get to a low balance. That still might work in San Antonio. Hermosa. Let's see what it looks like real fast. Never buy a note on something you don't want to end up owning, ladies and gentlemen. All right. So, oh, okay. Kind of, yeah, that pride of ownership, get an ex-Marine in there. That's not so bad. Kind of cookie cutter, little small house. You have a lot of that happening in San Antonio. Let's go back and see where it's located in San Antonio. It's probably on the south I-10 frontage road. Yeah, yeah, it's going to be on the, I think south side. Oh, oh, it's not south side. Okay, another area. Yeah, yeah, yeah. South of the airport, right off I-10. Could be worse. That might be the one exception I take a look at. Okay, and then go back here. All right, so let's get rid of everything else. San Juan, Lubbock, Texas, 208. Let's look at the Lubbock one. We've seen this one before. Because it's faster foreclosure. If they're not paying, then the P&I payment doesn't really matter too much. They owe 61 is UPB, legal balance is 60, 5%, 5%. And they've made on-time payments of 209. Made a double payment. They're kind of scratching dent. Yeah, that's not doesn't make any sense because it's too low an interest rate. So we're going to get rid of that one. All right, so let's just go up here and we're going to delete these off. Go up here and delete these off. We'll leave that one in San Antonio. I'm going to look at that one. Let's go up here and bring them all back. Okay, so now we've got higher ones. That's good. All right, so now we've limited by getting rid of those low P&I payments. We've narrowed it down. Well, something else is what we get it down to? 140. So we got rid of 40. Let's get rid of the ones in Chicago. We don't need those. Ugh. Chicago. Nope, there's only the one. That's good. All right. So that's kind of the aspect that you would do is looking at um let numbers be your guide. That's the biggest thing. What they've paid versus what they're supposed to pay. If what they've actual paid is greater than what they are supposed to pay, that's a momentum. That's an opportunity. But you see, a lot of these are probably not going to be worth you making offers on stuff because you don't want to pay 80 cents on the dollar to get a 5% return and potentially 9% return. Okay. That's where it's like, okay, the ones on the top of the higher ROIs, those ones I'm going to chase. The ones at the bottom where they haven't paid anything, those would be the ones that I would potentially look for foreclosures that I buy, fast foreclose, and either sell it at the auction or take it back as an REO and fix it up. Okay. But that's what we like to do, guys. That's what we do. So, like, let's look at some of these other faster foreclosure areas. Minnesota is not a fast foreclosure state because they've got a redemption period, so you wouldn't do that one. Pascagoula is kind of small. Miami, New Orleans takes forever. San Francisco. Let's see what this property in San Francisco looks like. They filed BK a couple years ago. Don't see a lot of stuff in San Francisco. Let's look at this one. All right. So this one, they haven't paid anything. They're supposed to pay $1,500 a month. got a bunch of equity. They paid less than they're supposed to. Oh, it's a single family condo. They only made 8 months of payments and haven't made a payment since January. I wouldn't necessarily buy anything in San Francisco right now just because it's such a crap hole. Long foreclosures, it's just a mess of a city. And we all know the politicians out there have done a great job over it. This is a condo, so it's going to have probably some condos. Yeah, it's in there. What's that next to it? Training complex. Okay, so you got a condo across the street. This photo is from March of this year. Okay, well, it'd be tough for parking on the street. Look at that. Probably not. Anyway, not my idea what I want to own. All right, let's go back here to the spreadsheet. Let's look at one more, and then we will call it a day. Before you go, so let's go straight back to spreadsheet. Come on. Okay, you can see. All right, let's go back up here some more. Temecula, California. Coppell, Texas. Okay, let's look at Coppell, Texas here. See what they have done. It's worth 730. They're supposed to make a 1,700 month of payment, 4% interest rate. Maturity dates, they look like they modified them because it's a 41 year. Yeah. PP's 379. They've made less than what they're supposed to. Since it's text, yeah, they made a payment for 3,400, a double payment. They're trying to stay on there. So see, yeah, it goes back to May. May's payment 2014. So are they ahead? March, April. Yeah. Kind of, yeah. No. I would look at that one, see if, they just made a payment in May. They're trying to make payments to stay up there. I don't know about that. That's no, not a good enough deal for me to be. Well, pick it up at 323, the 0404. That's 81 grand in difference. It might make sense to take look at an offer on it and see where they're at. They made June, July, and then require the full amount due. BK Chapter 13, so it's hit and miss. Oh, they filed it last year, so they should be in a payment plan. Should be paying on time. They're not. So they're not paying on time. Discharge it from the bankruptcy and then require the foreclosure. Oh, this is so. This is a square foot, 2,900 square foot home. Oh, well, it's somewhere in here. 766. So it's either that one. 760. So it's going to be this one here in white, right in front of car here. Can't get in front of it. Damn it all. Let's do search for images. There we go. 764 Huntington Street, Coppell, Texas. So it was listed for sale. That's probably why they stopped making payments on it. Well, it's off market. 4-bedroom, 3-bath. No, that's a AI version. That's not an actual version of it. So it was listed. So 4-bedroom, 3-bath, 3,000 square feet roughly, built in 2016. It's an old photo of it back then in the day. All righty. Now, that potentially could be one you foreclose on. but they can also come to the table. That's not an accurate photo of it either, based on what we've seen. Yeah. All right. So that's what we do, folks. You look at, if you want to take foreclosures on a tape like this, those that haven't made payments, and dive into that. Those that you're looking for cash flow, you want ones that they've made more than that we're supposed to make, and you buy them at 80 cents on the dollar, a little bit less depending on the interest rate. Could you always offer less than kind of what they're, but I'm going to tell you right now, they're mostly going to come back and probably want to be that 80 cents, 80% of the legal balance range. It's pretty much, sometimes they go into 90, sometimes they go into 95. In this case, they're smoking crack and they want to do it. Individual bids are accepted on these guys. You can cherry pick these all day long, this type of tape. Like I said, if you want to get signed up to make offers on stuff, sign up for our monthly membership at noteumbrella.com. That's $97 a month. It gives you access to replays of our workshop. It also gives you access to tapes that come in. And those are the first people that see our tapes besides our one-on-one coaching students. So if you're looking to take your note business next level, we're here to help you. We're really excited about how successful our coaching program is and helping people take their business next levels. People making six figures in notes, leaving their job or doing this as a hobby to help them take it down, whatever. And it doesn't have to be your full time. If you're a hobbyist, you want to do this part-time, that's great. We can show you how to do that. But there's no better way than being direct to tapes. And that's one of the great things that we show you in our one-on-one coaching is how to get direct to the sellers, how to get direct to banks sending you lists so you don't have to go through me or some crappy online website that doesn't have much to choose from. So as always, guys, glad to have you here. We're going to wrap it up for the day on this stuff. If you're in the WCN crew, look for me to upload some of our formulas in this tape back into the Basecamp group for you guys to take a look at and go from there. But thank you guys so much. Have a great day. Once again, hopefully you had a good 4th of July. And once again, prayers for the folks and the families and everybody that's dealt with issues from the floods. Our prayers over the families and the lost ones out there as well. So guys, go out, take action. Hopefully we'll see you at the top. And don't forget to sign up for that free one-day class at noteweekend.com. Any other questions before I guys let you go for the day? Thank you, Dee Dee. Thank you, Fernando. Thank you, Judy. Thank you, Real Story. Thank you, Lenore. Appreciate everybody on here who's joined us. And I'll see you all for soon. Sounds good, Fernando. Have a great day, bud. Bye.
Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get the lists of notes from banks, hedge funds on a regular basis, not 1 or 2 or 3 or 4, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day 1 is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day 2 is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day 3 is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th or the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have a 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition. No questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilet stands and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.